In 6 to 10 months, I believe the stock will have a 3 in front of it. In the end, I think this is more of an air pocket that we're seeing from a growth viewpoint, so I think it's back above 300. I believe that margins are beginning to narrow and that the statistics are cautious for the upcoming year. A titanic struggle of ideas is taking place in the center of Wall Street, where fortunes are determined by the whims of the market. This titanic battle has enormous stakes, and the outcome could determine the fate of one of the most exciting businesses in the world. In an exciting development, optimistic investors are uniting to support the electric giant and its mysterious CEO, Elon Musk, in response to a recent gloomy prediction from a well-known analyst. However, there's more to this story than meets the eye, so buckle up. What if I told you that a groundbreaking Tesla invention that has the potential to completely alter the game is buried beneath a maze of financial data and market forecasts? We reveal the strategies and the secrets in this thrilling conflict of views today. We'll delve into Tesla's innovative technology, examine the divergent opinions of experts, and uncover a special opportunity that might make you the next Tesla. Prepare yourself for an exciting ride filled with discussion, insights, and a hint of mystery. But press that like and subscribe button first. Here at Tesla Stock News, let's explore the core of the debate surrounding Tesla. In a surprising turn of events, Tesla suffered a big blow on November 9th when HSBC, a renowned banking institution, began to cover the massive electric car manufacturer. The financial world was shocked by HSBC's move as they started covering Tesla and also gave the company a reduced rating with a relatively cautious price objective of $1,146 per share. Considering that this move suggested a significant 30% drop from the stock's current trading levels, it was extremely noticeable. Michael Tyndall, HSBC's seasoned analyst, was the main force behind the bank's cautious position. Renowned for his perceptive market analysis, Tyndall listed a number of important considerations that supported his view that Tesla may encounter difficulties in the near future. A fundamental apprehension expressed by Tyndall pertains to Tesla's aspirational expansion beyond customary automobile production. The company's forays into artificial intelligence, self-driving technologies, robotics, and the building of the potent Dojo supercomputer have all been hailed as important growth opportunities. But these expansions can come at a price that's noticeably greater than the industry average. According to Tyndall, the significant cost rise is a result of Tesla having to overcome tough regulatory obstacles and cutting-edge technology barriers in these non-automotive fields. The financial community is buzzing about HSBC's start of coverage on Tesla and its accompanying reduced rating with a $1,146 price target. Elon Musk's magnetic leadership and Michael Tyndall's worries about Tesla's non-automotive endeavors have brought to light certain obstacles that the business may encounter in its pursuit of long-term success. As Tesla continues to forge its way in the rapidly evolving electric vehicle market, investors and enthusiasts alike will surely be keeping a close eye on this development. Notwithstanding these reservations, the most remarkable feature of Tyndall's research may be focused on the mysterious individual leading Tesla, Elon Musk. Tesla's quick ascension has been fueled by the innovative ideas and unusual approach to business of its billionaire CEO, Elon Musk, who has also occasionally caused volatility in the company's shares. An intriguing dimension is added to the analysis by Tyndall's concern regarding Musk's potential impact on Tesla's future performance. The corporation enjoys a degree of consumer recognition that far outweighs the financial resources devoted to marketing and advertising because to Elon Musk's worldwide notoriety. This has consequently resulted in a measurable benefit for the profit and loss statement of the business. But as Tyndall pointed out, it's critical to ignore Elon Musk's ongoing legal issues and take into account the serious risk that his well-known character presents to the company as a single individual. Based on Tyndall's analysis, Tesla's stock performance demonstrated the influence of these evaluations. The stock fell significantly. It ended the day at $29.98, down almost 5.5% from its opening price. This was a significant divergence from its earlier trading levels prior to the announcement of its third-quarter earnings. On the other hand, Tesla's shares enjoyed a slight recovery the next day, rising 2.2% to $24.65. the unrelenting backing of Tesla devotees, who were unfazed by HSBC's voluminous 108-page analysis and its impact on the company's stock price, propelled this recovery. It is important to consider the stock's path prior to these events. Tesla shares saw a significant 32% decrease from its closing high of $291.26 on July 19, 2023, and the close on October 30 at $97.30. But there was some hope for Tesla investors as the closing price on November 10th increased by 8.8% from the level on October 30th. Investors are engaged in a heated argument over Tesla's prospects due to differing opinions. While some are enthusiastic, others are more skeptical, as demonstrated by Tyndall. As managing partner of Future Fund and a well-known supporter of Tesla, Gary Black has become an outspoken evangelist for the company's potential. Black responded to the HSBC research by saying that the report's reliance on a reversion to the mean methodology is more in line with the value of a heritage auto firm with moderate growth than it is with a high-growth company focused on technology, such as Tesla. A major point of departure from the HSBC research is one of Black's main arguments, which is the expected growth trajectory of Tesla's vehicle volume. Black has a more optimistic outlook, despite the report's relatively moderate expansion projection that Tesla's volume will increase from 1.8 million vehicles in 2023 to 5.9 million vehicles in 2030. According to his prediction, Tesla will produce more than 10 million vehicles by 2030, provided that a strong scenario of 60% worldwide adoption of electric vehicles and a significant 20% market share for Tesla in the EV industry are met. Do you know anyone else who is as optimistic about Tesla as Black is? Our pals from Seeking Alpha. It's not enough to merely watch Tesla's phenomenal rise from the sidelines. Seeking Alpha is your one-stop shop for the most recent information on Tesla, Tesla stock price targets, Tesla innovation, and everything Elon Musk related for fans of the company and those who have an eye for finding the next big stock market find. The internet's top pro-Tesla news outlet is Seeking Alpha. Get to the facts without listening to the lamestream media's anti-Tesla propaganda. For a unique Black Friday deal, click the link in the description. You won't find a better deal anywhere else. Although supporters like Gary Black point out that Tesla has the ability to reach even higher heights than are now expected, driven by a combination of innovation, market demand, and EV adoption trends, ACC's cautious position raises legitimate worries. The interaction between these divergent points of view will surely impact Tesla's future direction as it continues to chart its course. Speaking of consumer needs, EV adoption patterns, and keeping up with game-changing firms like Tesla, having access to trustworthy sources is essential. That's where our Seeking Alpha partners come into play. They make it simpler for you to navigate the world of investments by offering insightful information on the stock market and new trends. And what do you know? Black Friday is quickly approaching, so now is the ideal moment to take advantage of their exclusive deal. Thus, don't pass on this year's greatest deal. For information on Seeking Alpha's exclusive Black Friday offer, click the link in the description. Market analysts have been reacting fervently to the release of the voluminous 108-page HSBC analysis. Gary Black and Dan Ives, in particular, have provided divergent assessments on Tesla's future. Renowned for his optimistic views on Tesla, Gary Black raised his doubts regarding the report's methodology, speculating that it might have been modified to arrive at a predetermined outcome. Black has downgraded his rating and is still targeting $1,300 for Tesla. He seems to think that the study is biased because it supports a more conservative valuation. However, it's important to remember that Tesla is always pushing the envelope in terms of innovation. Their latest advancement in battery technology has the potential to completely transform the market for electric vehicles. This invention not only increases the efficiency and range of Tesla's cars, but also drastically lowers production costs, opening up the market to more people who could otherwise not be able to afford electric automobiles. It solidifies Tesla's standing as a contemporary marvel and a pioneer in the very competitive automotive sector. Now that Black Friday is rapidly approaching, it's the ideal moment to learn about game-changing businesses like Tesla. And that's where our Seeking Alpha partners come into play. They make it simpler for you to navigate the world of investments by offering insightful information on the stock market and new trends. Additionally, Seeking Alpha is having the greatest deal of the year, an exclusive Black Friday promotion. Conversely, Dan Ives, an analyst at Wedbush Securities and a strong supporter of Tesla, sees the latest sell-off as a compelling chance to acquire the stock. He fervently maintains that Tesla is a disruptive technology firm with the potential to be a game changer rather than just an automaker. This viewpoint strengthens his belief that now is the time to take advantage of, not avoid, the decline in Tesla's stock price. Ives goes one step further and makes the audacious prediction that over the following 6 to 12 months, Tesla's stock would not only rise but also explode, selling at a price per share of more than $300. Because this level hasn't been seen since 2022, this prognosis is quite noteworthy. His confidence stems from his conviction that Tesla still has room to expand, especially given recent advancements in battery technology and the possibility that fully autonomous vehicles will someday become a reality. Ives expressed his bullish outlook in an interview with CNBC, saying that he sees the current state of affairs as a transitory air pocket and that he expects Tesla to make a comeback in the upcoming year. He views the company's many product offerings, such as its autonomous driving capabilities and battery technology, as potent growth accelerators. Analyst Dan Ives is an advocate of an optimistic perspective for Tesla's future, citing a number of important aspects that he believes will contribute to the company's long-term success. A key component of Ives's positive outlook is his claim that Tesla has nearly finished cutting prices, with about 95% of the cutbacks currently in place. Should this forecast come to pass, Tesla's gross margins may experience a notable increase, bringing it into closer alignment with the profitability levels of big companies in the tech sector. In addition, Ives believes that Tesla's calculated approach in China is a strong attempt to recapture market share. He is confident that Tesla's cost-cutting measures in the area will ultimately prove successful in fortifying its position, even in the face of a brief slowdown in Chinese demand. This calculated strategy highlights Tesla's flexibility and dedication to managing the complexities of the worldwide market. Ives also emphasizes how dominant Tesla is still in the electric vehicle (EV) market. He argues that Tesla continues to have a significant advantage over its rivals, especially when it comes to increasing manufacturing. Ives believes that many of Tesla's competitors are still figuring out how to achieve scale, which makes them less of a danger to the market right now. It is still Tesla's world, and everyone's paying rent, Ives says in a succinct but powerful remark that sums up Tesla's current standing in the market. This declaration highlights the company's dominance in the market and its capacity to set the pace in the quickly changing EV industry. If Ives' optimistic prediction comes true, it will mostly depend on how well Tesla carries out its plans going forward, as well as how innovative it stays and how long it leads the EV industry. Thus, we witnessed how different viewpoints regarding Tesla's future shaped the conversation today, with some investors placing bets on the company's ability to maintain its leadership in the electric vehicle market, while others were cautious. As we've seen, the forefront of this shift is being driven by technologies like Tesla's revolutionary battery technology. We would love to hear from you before we conclude. What do you think will happen to Tesla? Do you consider it to be an industry pioneer or a business that is encountering difficulties? Post your thoughts in the comments section below. If you enjoyed reading this debate, remember to subscribe to Tesla Stock News and press the like button for more. We appreciate you being here today, and we hope to see you in the future video.